Everything is personal right here. Everything is personal right here.
Ladies and gentlemen, boys and girls, welcome to another episode of Everything is Personal. And today we have a really special guest with us, Mr. Rob Sechrist, who is the co-founder and president of Polaris Equity Group and manager of the Polaris Fund. Welcome to the show. Did I get that right? It's a long introduction, so I had to kind of cheat and read. I usually remember, but I just don't want to mess it up.
Yeah, thanks for having me. Yes, you got it right.
All right, so we're talking we're talking about, and I was saying before that, looking at doing some research on you, there's a lot of interviews. There are a lot of talks about your advice for investment and cannabis investment in general, but we don't know you. So this is what I'm curious to find out about Rob. So first, where did you grow up?
Sure. So I grew up here in Orange County, California, in Newport Beach area. And it's where my family's from. And went to school here in Orange County, and then went to college down in San Diego, and then moved back 20 years later, back to Orange County. So
Where'd you go to school in San Diego?
San Diego State.
Yeah, because we just visited my daughter's doing her college tour right now, so she wants to stay local. I'm in LA, so we're the UC schools, the UCLA, USC, and then the SD schools, and then we're gonna go to Berkeley and check out Berkeley, but she wants to stay local. So luckily, any siblings, brothers, sisters?
Yeah, so I've got 4 siblings. I'm the oldest. I have 3 younger brothers and a younger sister.
Where in Orange County?
Newport
Beach. Yes, yeah. Cool. And did you, when you were going, did you guys travel to LA to go out at all, or you kind of stayed in Orange County?
Yeah, a little bit here and there, but mainly Orange County.
I'm from Philly, and I always try to get this lay of the land. I think like Southern California is such an anomaly for people that are not from here, because it's even like I live in LA, but I live in the Valley in Studio City, and people from like the West Side, like they don't even go over. I'm like, it's 15, 20-minute drive. What do you mean? No. That's like a different universe. So people don't travel.
Yeah.
I find it fascinating.
Yes, it's just too difficult to back in the day when you were out rebel rousing around to try to go those distances. You want to stay very close to home.
Well, that's what I was saying, because I used to have dispensaries in Orange County, and I remember on Fridays, like I would drive to, I think, like Costa Mesa, and coming back from Costa Mesa, it would take me 3 hours to get back to LA.
Yeah.
So even though it doesn't seem far, but it is. So how you went to school? What did you go to school for? What did you want to do?
Yeah, so I went to school for business. I ended up graduating in public administration, which is the public sector of business, just because I wanted to graduate within a reasonable time period, and I just couldn't get my classes. So I took 25 units my last year. Wow. It kind of trained me that in reality, you can achieve a lot more than you think is possible. And what that taught me is the more busy you are, the more efficient you are, and you are all about processes. And, I learned, I didn't learn a whole lot at school. I learned a few things, but I learned how to get things done through processes. And that ability is one of the most important abilities that we use still today. If you can't have efficient processes to review and organize information, then you have no chance of being able to scale your business.
Right. So how did you go into real estate right away, or what did you do at school?
So I went into my family's in the medical industry, medical manufacturing, and I come from a family of entrepreneurs. I went into the medical sector, but not for my family's company. I went into orthopedic sales, which is medical sales is one of the most tough sales jobs you could possibly have. Nobody wants to talk to a sales rep, and they got major gatekeepers up. But while I was working in my first actual job, I was always working on business plans and working on what it would be that I wanted to do. And I did my first capital raise for a restaurant up in the Bay Area. And then the next venture was I launched my own company, which was an action sports company. I launched that in my early 20s, and that was a wakeboard company back in the early 90s. And that company, I got it up to about 2.4 million in annual revenue, with a high water mark of about 30 direct and indirect people working for me. And ultimately, I sold that company, and I realized, man, there was so much work that you had to do to produce 2.4 million in revenue and get 10% gross net profit. And that's only if everybody paid all their 1.6 million of receivables. And it seemed like it was so much effort to do all that. And I realized I want to do a bigger sales transactions, shorter time frame, and get paid at the close. And so that meant real estate. And so I went into international real estate transactions, and started my career there. And shortly after I got everything ramped up to do that, we had the meltdown occurring in 2007. I had about $100 million worth of transactions that were in the process of funding, and the total market collapsed. And I was sitting there, and my best friend who from high school, Dan, he's the co-founder of Polaris and the co-manager of the fund as well. He called me and said, buddy, there is a lot going on up here, up in Orange County. Why don't you come on up and let's see if we can get through all what we think is going to happen. And so I came back to Orange County, and back during that time, we ended up ultimately foreclosing on several hundred properties and had to reposition about 120 of them. And that experience was a very important experience, because you really don't learn a whole lot when things are all going perfect. It's when you have distress situations that you really learn how to refine things and make things work. And so after we repositioned all those assets, we founded Polaris Equity Group together in 2010, and here we are today.
When you say reposition, I'm just curious, because I have a real estate background too, but as a broker. But I think I was telling you earlier before we got on that during that 2007, 2008, my specialty originally was gas stations. So I had a mentor who said, "Hey, you know what? Why don't you just specialize in something?" And I got a gas station transaction, and I had no idea about. What do you mean contamination? What do you mean remediation? I had no idea. It was a very, very difficult transaction. I finally got through it, and I learned. As you said, it's like you learn, drinking out of the fire hose. You learn. I'm like, remediation. Okay, we'll do all that stuff. And then the books were interesting there too. So I became that, and then I got a gas station with a strip center too. So I said, hey, maybe I'll do some retail too. So same thing. I had all these people ready to transact, and I couldn't get fund. There's no loans, nothing. It's during that time. So what do you do? So then I had these other guys that came back, and I had some bank relationships. So looking at non-performing notes, and then what they wanted to do was see if they can do a deed in lieu. So that whole thing, we started coming for those of you who don't know, and correct me if I'm wrong, Rob, like a deed in lieu of foreclosure. We would go and say, hey, sign the deed over to us. We'll pay you $50,000 to help you get out of your property, maybe, get some debt, but we'll take over, the actual property for $50,000. And they were doing all that. It was a short window, maybe a few months. They were really transacting there. And then, the hedge funds started getting involved, and there was big portfolio deals that were coming. So when you're saying reposition a loan, was that renegotiate the actual loan?
Yeah. So it was interesting during that time. The borrowers were a lot of the borrowers of those 200 properties or so we were foreclosing on were trying to do the right thing. These are all investment properties. These aren't owner occupied. But a lot of them were trying to making the payments, and they were burning the equity that was remaining was diminishing every month, in 5-10% chunks. And I would tell them, some of them I had to tell them, stop making your payments so we can foreclose. We can't, there's going to be no equity left by the time you're not going to be able to sell this property. You're going to be upside down. And it was an interesting time to have to say that to somebody, to make them realize, look, you need to fire sell this thing right away so that you minimize your exposure on a personal guarantees, what that might be. But repositioning them was that in the transactions that of the 200 or so, about 120 reverted back to us. And that meant that of those, they had to, depending on what the situation was, they had to be completed if they were partially completed, or if they were completed and we were holding them, we just needed to wait. We thought it would be 3 to 5 years total, 3 years for urban markets and 5 years for secondary markets before the basis of the value would come back to the same as the original note value. And that ended up being the case. And so we, with those properties, they were all eventually sold and or completed and, finished and all moved through, which was no awesome task to have to do, but that's what you got to do.
So is that when you decided maybe it's better if we put together a REIT? And I'll ask you what a REIT is so we can explain to people, so then you can start getting outside investments for the real estate portfolio?
That decision had nothing to do with it. It's just that was a systemic, market collapse that was really unfortunate to see, because our loans and our borrowers didn't have those types of loans where it was stated income, stated assets, and they didn't have the ability to pay for it. But yet, when all those institutional loans that were written like that, and you had a systemic failure across the board, and so all these markets are coming onto the market at once, it crushes the values across the board, and then it takes it for everybody. So, it's today I don't think that that's the case with the housing market. I think that that today most borrowers, I think, can still probably afford their mortgages, in the few that can't. It won't be systemic across the nation, where you're going to have a total collapse across the nation, nationwide. So,
all right. So what is a REIT?
Yeah, so a REIT is just a real estate investment trust. Is just the acronym for the tax saving structure that is put together for basically individuals to take advantage of the same tax structures that some of these hedge funds and things were getting many years ago. So a real estate investment trust, there's actually two types that most people don't know. There's equity REITs, which are the traditional ones, and those own property, and so they get all the accretive upside for the value increases in the portfolio value of the land as it increases. But also, if it was to decrease, they would go down as well. And then they get the investors get the qualified REIT dividend is dispersed to them. Whatever rents are collected is dispersed, but it's dispersed as a REIT dividend, and so you get a 20% reduction in your tax rate on that federal income. And then what the next part that's really interesting is for your state taxes, the investors only pay state taxes in the state that they're domiciled. That's huge when you have, states like Texas, Nevada, Florida with no state taxes. There's a pretty massive incentive there. And there's some other very small ones. There's no the REIT cleanses UBTI or so that for self-directed accounts you don't have some accounting issues. But those are the primary reasons. And we are a mortgage REIT, so the difference from that, or a debt REIT, the difference there is we don't own the property. There is no accretive increase or decrease. So we're a lot more close. We're a lot less risky in the risk profile because there's no upside or downside. We've got the protective equity. But the yields are traditionally a lot higher on the lending model. Yeah, but you don't get that accretive value. And so most retail investors don't understand the difference, and especially in the cannabis sector, they're conflating equity REITs with mortgage REITs, and they see IIPR as one of the most popular ones that just went to the moon on the value of the equity REIT. And then there's a couple of other publicly traded mortgage REITs that came out, and a mortgage REIT should theoretically never trade that much of a premium to its book value because you're only going to ever get the note values back plus the dividend. And so there's really not a big uplift in the share price there, but they do typically have higher yields. And so I think that a lot of people misunderstood that and went into some of the mortgage REITs thinking they were equity REITs, but that's probably a conversation for another day.
Yeah, I think what you're saying, if I understand it correctly, your REIT is providing the financing for the properties, and other REITs actually hold the asset themselves.
Correct.
Against that, right? So it makes total sense. So how'd you get into cannabis?
Sure. So our local congressman was Dana Rohrabacher at the time, and we know Dana. He's kind of a character, and when he passed the Rohrabacher-Blumenauer amendment that defunded the Department of Justice from any prosecution of a cannabis-related business, that meant to us that this was the largest newly created asset class that we could lend on without fear of our borrowers' tenants being prosecuted by the federal government. And so we knew that we had the skill set. We'd originated about 5,000 transactions for about $5 billion. And so we knew we had the skill set to lend on this sector. And we knew that all the real estate in the sector, whether it existed or is going to exist, would need to be repositioned for a specialty use asset to qualify for the license. Mm-hmm. So that passed in 2014. We analyzed the sector, and by 2016, we started originating in this sector. And we quickly realized that this specialty use asset sector was so vastly superior that we decided to be the first dedicated solely to cannabis lender in the sector. And then in 2018, we launched the Pelorus Fund. 2020, we converted that to the first private mortgage REIT in the sector. And we were the first dedicated lender. We were the first with a dedicated fund, the first private mortgage REIT, the first to get FDIC insured banking warehouse lines of credit, and the first to get investment grade rated with institutional investors in our bond and do a bond offering. So we've been the first for plowing the path for everybody in the whole sector. The only thing that we weren't first at was going public, but that's because we didn't want to. We didn't think that it was going to be a net benefit in the long run. And our two publicly traded peers are paying the price now. Their share prices are trading at or below their book value, and that means they can't issue any more equity. And so they're kind of dead in the water while we're continuing to plow on through, and we have no volatility of our share price.
Yeah, I think that's smart. My company was in the same boat a couple of times of, let's go public. There's a SPAC deal. There's this, there's that. We can raise money that way. I was like, I don't really understand it kind of from a high level, but also let's just make money as a company. And that way we don't have to worry about it. And at some point, if it makes sense for us to do that, we'll do that. But let's not follow this trend that everybody's doing. And I think the entire industry is suffering for that. So I think I was going to ask you this question. I think you just answered it. I was going to ask you, what is the criteria for winning the best lender at the Benzinga Cannabis Conference? I just want to see how you get that trophy. The best lender we'll give to Rob.
We weren't told what the criteria was, and we didn't know how that was done. There's quite a few lenders in the sector, and there are some very sophisticated lenders. We have a couple of publicly traded peers. We have about 100 private lenders out there, and numerous banks that are lending. So we weren't told what that criteria was, but I was told after the fact, and I haven't had a chance to look at it, that we could go back and look at who the judges were, and that might give me some indication of it. But I think that for us, we've been in the sector the longest. We've done the most transactions. We've had the most payoffs. And as of this week, we'll be the largest by far of any dedicated lender to the sector.
Well, congratulations on that.
Thanks.
It's definitely a need that, because it's very difficult to get money in the cannabis space, and by you having that, I think you're helping a lot of companies grow. So what's the ideal investment? Like, what do you look for in an investment?
So we have two sides. We have the borrower side, and we're typically 10 to 30 million is a sweet spot for us, but we can issue transactions up to 100 million, and even more than that if we needed to. We have ways of slicing that transaction up. But typically it has to be a commercial building, no agricultural component, and we need to de-risk this as much as possible. And in the cannabis lending sector, you need an experienced cannabis operator. It is so extremely difficult from just a growing standpoint, not to mention compliance and all the rest of the nuances of this sector. So we need a very experienced operator that is just looking to expand their operations. And then we need a sponsor that is bank quality, that can handle their personal balance sheet, their liquidity, their cash flow would support this transaction. Their personal guarantee or the corporate guarantee is what would take this transaction to give us that credit worthiness of that transaction. So all those things we look at on the transaction, and then we can always adjust the LTV and the loan to cost. So we lend off of loan to cost basis because there's just truly not much price discovery from arm's length secondary trades happening in the sector. So we believe that the most true form of establishing a lending basis is off of cost basis. So we'll end up to 60% of the cost basis on our bridge lending program, and our fully stabilized, we go up to 75% cost basis.
And you have to have real estate in order for you to lend. You don't lend on business. It has to have an asset.
We are as close to the true real estate model as possible. Many of our peers are in the same sector, are lending further up the risk profile. And they might be including more than just the real estate. They might be including the enterprise value of the company, the accounts receivable, cash flows, and the value of the real estate license for the cannabis operator.
Mm-hmm.
We do collateralize that license as well, but we don't give it any value. We just do it we need that license in the event that we ever did have to reposition that asset. We need the license to be able to reposition another tenant in as quickly as possible.
So if I would come to you and I would say, hey, Rob, I have a business. We have nutrients for cannabis plants that we're creating. We have a warehouse. We're making nutrients. Do you care? I don't have a license because I don't need one. I'm just making nutrients. Is that an ideal investment? Or is it, I have a grow that's 5,000 feet. We're yielding this much. We're licensed as a cultivation facility, but we're doing so well. We need a 20,000 square foot facility.
Yeah.
What would be more ideal?
Scenario one, we wouldn't do because it's not required for our special. There's nothing special about that transaction. Any bank should be able to do that transaction. There's no specialty license. There's no specialty use. Mm-hmm. It's just a nutrients company, just similar to whatever types of businesses that are out there. We would need to lend to a facility that is a licensed cannabis operator.
Got it. So either they are a cultivator, a manufacturer, or a distribution company or something like that it would be really difficult for a typical bank to lend to them because of the risk involved.
Yeah, I wouldn't necessarily call it because of the risk. It's just more that the most banks don't have the compliance set up in place to manage these types of borrowers or even depositors. But even still, even for the banks that do, none of them can compete with us as a private lender in the bridge lending space. So we've competed against banks for 30 years successfully, and they just can't compete. There's no way a bank can process wire the funds for an approved draw within 72 hours. It's just impossible.
It's still a cash business though, right? Transaction wise, so people can people pay you in cash?
Yeah. So great question. I get asked it all the time. So it's actually not a cash business for our borrowers. So I want to make a distinction. Our borrowers are the owners of the commercial real estate, and then the tenants are the cannabis operators. Now, most of our borrowers are owner users, but even though the cash might be collected at a dispensary level, that's because there's a buildup because they can't use the credit cards because it's on the federal system. All of our borrowers, all 2,000 transactions and their tenants that we've ever seen, all have had banking in place. If we ever saw one that didn't have banking, that would be a massive red flag to us. So we don't accept cash. We wouldn't accept cash even outside of this sector. And there's no cash being exchanged between any of the things that we're doing. It's all done by certified wires, both inbound and outbound. So that's kind of a fallacy. So there's tier one banking. There's 704 banks listed on FinCEN's website that are doing tier one banking, which is for cannabis operators that are depositing cash. And so they can deposit that cash once it's banked. They wire and move that money around just like anybody else does.
Yeah, and you answered the question. I was going to ask whether your borrower, your customer, is the person who says, "I'm going to buy this warehouse, and I have a tenant that's going to come in here, and they're going to grow in here, and I just want you to finance this building," or is it, "I have a business idea, and I just got a license to grow, and I need to get the real estate, but I also am going to be the operator." I think you mentioned.
We could do either of those scenarios as long as the tenant operator has substantial experience. And so we've de-risked the fact that they're not just starting off on doing cannabis.
So what's your criteria? What's the, and I'm telling you, this question is because I had personal situations. So just to give you a little bit of background. So when I started in the cannabis space 20 some years ago, but in the dispensary space was about 2009, 2010. And we ended up getting one dispensary in Santa Ana. And then we ended up having 5 all in Orange County, all under the same flag. It was called Kush Kingdom at the time. So I remember, and this was, I mean, it's the Wild West now. It's not the Wild West now. Now it's legitimate business, but it was the really Wild West. So we finally, and the reason I even got involved in this was through real estate. These guys came in to an office. I was just kind of consulting, and they wanted to open an alternative pharmacy. We ended up, saying they really wanted to open up a dispensary, had no paperwork, nothing. So I helped them, and they offered me to go in as a partner with them. But this was my experience with the landlord. And this goes several different times. So he had the building. We came in, told him what we were doing. Great. And then he was watching us and said, "Hey, you guys are doing fairly well. We're going to raise the rent." I'm like, "Well, we have a lease." "All right, well, sue me." "I can't sue you because I'm operating illegally." So it was a very, very interesting time where the landlords could do a lot of different things. And I even had a cultivation facility, same kind of thing. They're always trying to,
You should have talked to me back then, because all you would have had to have done is say, "Go ahead and sue me, you freaking ding dong." as the owner, knowing that I'm in the real estate, you're just as guilty as me. So there wasn't the Rohrabacher Blumenauer amendment to protect Sue back that started in 2014.
Yeah.
But that sucks. And a lot of people have been pushed around, but in reality, they were just as guilty as you were.
Yeah, of course. They knew everything, and it was before the Cole memo, and they were supposedly getting fined. So the one thing we just said, "You know what, we'll just pay all your fines. Don't worry about it. Just let us stay," kind of thing. But it was a really interesting time. And I remember going to pay taxes with wads of cash. So, and they were very happy to accept. They didn't balk at that. They're like, "Man, pay us, whatever. It's fine." personal question. Do you have any kids?
Yeah, I have a 6-year-old.
So what, it's a little too young. I was going to ask for what would you say for your kids in terms of cannabis? Like how would you speak to them about cannabis?
That's a really good question, and I'm happy to talk about it. So I think that cannabis is just like any other drug that can be abused. And while my kid and other kids' brains are still developing, I would not promote them using cannabis or alcohol or any drugs. I think that you want to have as much of your brain growth done before you venture into those things. And so I'm not sure what the age in each state is, but I would not recommend any kids getting involved in anything in an early age, not unless it was prescribed for them for whatever medical reason at the proper dosage. But it's unfortunate because, in fact, I just answered an email today, and it was tragic. It was from an institutional investor, and he said that 6 people had died, and from stemming from the use of cannabis, where it started from there. And I had to respond, and I said, "Look, I'm sorry. That's tragic. I'm sorry for your loss." I said, but to conflate that cannabis is what was that you're not going to invest in cannabis because people have lost their lives. How far do you want to take that policy? Are you not going to invest in any company that lends to drugstore pharmacies or a grocery store that sells alcohol? I mean, where do you want to stop? Because it's that is the wrong message to be sending. And in reality, normally I would just accept it and move past it, but this was a sensitive one for me. And I said, look, I have a kid, and I don't want my kid to end up in that situation. And I feel for you, but I think that you're broad brushing the issue. And I think that in reality, probably what happened with those people and most people is this opioid crisis. And I think that, everybody starts with pot. Well, yeah, pot is where it starts, but it probably started with alcohol. It probably started with cigarettes or something else, but weed is the easier one to say, but whatever. Our hope is we've financed over 4 million square feet of cannabis properties across the nation through the fundings that we've done. And we think that that's probably 15 to 20% of the entire revenue for the entire country. And so there's a significant amount of cannabis that is being produced in our facilities. And if just 1 or 2% of the entire population goes to cannabis as an alternative pain medication as opposed to opioids, I think that we've probably saved a few lives there. And that's ultimately what we want to do, is we want to start providing alternatives. In fact, we funded the first DEA licensed facility in Desert Hot Springs. So the DEA is issuing federal licenses today for research to look at, once they have a medical use that they can show, then they can deschedule it from Schedule 1. And I don't think that cannabis should be Schedule 1. I do think it should be regulated. I do think it's important to make sure that kids aren't getting this, and it's not abused. But if you're going to compare alcohol and cannabis, I think on every category, you're going to come out ahead on cannabis as far as what the damage, long-term damage, short-term, and impairments of being able to operate vehicles and machinery and things like that.
So if I understand, the person you were speaking about, they said that there were 6 deaths attributed to cannabis, or cannabis was
the
catalyst.
Yeah,
the gateway.
Catalyst. Yeah.
Yeah. Well, I mean, we've done a study that there's a genetic predisposition to opioid dependence, and you have sort of 1 in 4 individuals that have this predisposition. So if somebody that has a genetic predisposition consumes an opioid, they may actually be almost instantaneously dependent on that. So understanding up front that you have that, but you don't have the same thing with cannabis. And what happens is sometimes is your brain decides that since they have a stimulant from outside that's creating these neurochemicals, they're not going to create that anymore. They're going to start depending on that neurochemical from the outside that's coming in, that's stimulating that. And then when you stop doing that, your brain says, "Hey, no. I want that. I'm too lazy to make same thing with cocaine and dopamine." But in cannabis, it doesn't work that way. It's much more of a therapeutic substance that has internal receptors that create your own neurochemicals to be able to be expressed, especially if you're deficient in certain things, to help maintain homeostasis in your body. So I find it really fascinating. And it kind of piggyback on what you said about the DEA licenses. Well, so we have a DEA approved drug on the market, Epidiolex, that was from GW Pharmaceuticals, and Jazz bought them for $7 billion to create more of these. Based on that, shouldn't we already have a descheduling or a rescheduling, since there is a FDA approved drug on the market from cannabis?
I'm familiar with Jazz, that they're actually local here, and I'm familiar with that transaction, but I haven't put it to memory of how they have circumvented what the federal rules are there, and I'm not sure if that's being done for sale outside the U.S., which might be the scenario that I could think of off the top of my head, but I don't. Unfortunately, I would. Most of the stuff I would have the answer for, and that one I don't. So.
Yeah, that's fine. So just to give you a little bit of insight on there. So GW Pharmaceuticals went through the first company did a full clinical trial of a drug for childhood epilepsy called Dravet syndrome. And that drug is called Epidiolex. Yep. And they had a second one that was going through FDA approval called Sativex. And that was more of a 1-to-1. So the CBD, the drug that was derived from cannabidiol, CBD, which is Epidiolex, went through all three phases, was FDA approved, and is a drug that's sold in the United States for that specific condition. Gotcha. Sativex didn't go through all the way. It is being sold outside the United States and is going to come back to get approval in the European version of the FDA and coming back to the US. So there is a drug.
Yeah. So based on what you said, if the derivative is coming from CBD, then it can go through currently under the Hemp Act. You can derive some amounts of THC through hemp. So if that's how they're doing it, then that they can get it through there. If they're going straight THC through cannabis, that's probably that. So I'm guessing that based on what you just said, they probably went through the hemp for CBD and the cannabis through there.
I don't think it was a hemp derived, but it's not the point. I was just making the point that
gotcha.
There are clinical studies that have all been completed, and I think it's going to take them some time to figure out what to do and how to regulate. But speaking of, what do you see sort of as the future of this moving towards federal descheduling or rescheduling? Do you see maybe there's going to be several different paths? Is there going to be a medical path? Is it going to be a therapeutic? Is it going to be just an adult use? What do you think?
It's so tough to tell because the horse is so far out of the barn and across the many different states. And what the issue, there's several issues that most people don't understand. First of all, there is not really a way to get the feds to legalize it. It would become the prohibition would end. And so that's actually the language you would want to use is end prohibition, not federal legalization, because federal legalization would require a different direction to go. So if prohibition is ended on cannabis, then it falls back to what the states have done for those states, and what they've said, and then the Fed would not interfere in that particular circumstance. So I think that ultimately it's going to remain as a state-based issue. That's how it's been going so far, and I think that that's what's ultimately going to happen. I do think though that in this midterm after in the lame duck session, there's a small probability we might get some minimal legislative decriminalization, but nothing addressing the regulatory or ending of prohibition. And I think that in the next 5 years, the remaining 12 states or so will have some form of cannabis legalized, most likely medical will happen in those states. Even I think it's Idaho is probably one of the tougher ones to do. So I think that it's going to happen, but to get it to where to get the medical side is difficult. How are you going to have something being sold in the pharmacy, medical grade, that you could buy at the retail store right next door at the same quantity? So it's going to be interesting how that market develops. I can think of a couple of ways they could do that. They could limit the amount that is sold in the retail stores, but I just don't see the states pulling back on what they've already issued, because now the feds have come in and said we're doing the medical side to this. So it's yet to be determined. There's a lot to be unpacked there, and happy to go deeper in if you want, but I don't know how much.
Yeah, no, I think you hit the nail on the head. I think there was a precedent that was already set. We had alcohol prohibition. Prohibition had been repealed. And then, states get to decide their interstate commerce, and then they create these little groups and pacts between states. So you have these tri-state areas, New York, New Jersey, Connecticut, and then Pennsylvania said, no, we're going to take all the money. We're going to be the state, because you have to buy the alcohol through our state stores. So every single state decide their own. And I think there's, that precedent set. So I completely agree with you on that. And as far as the pharmacies go, et cetera, I mean, you have OTC products sold in the pharmacy, which is, sold in the dispensary or whatever. But some of them, you have to go show your driver's license because they have a higher dose of something or another. So maybe there's a way to be able to take a look at that and doing something similar to that too. So what are your plans about expansion? Are you looking to expand in different countries, or is this just like you have enough to handle it in the US, or can you even go outside of the US?
So we know that the US market for the real estate is about a $50 billion asset class once it's fully built out. And there's been about $4 billion worth of credit issued. So we've got quite a bit of runway to go here in the United States. But there are some amazing opportunities internationally. We're capable of underwriting and funding transactions internationally, not from the Polaris Fund, but we have that capability. We have been in Europe, but we have been overseas. We have looked at transactions, and we may be willing to do something. We are the most experienced lender in the whole world. So we've got the most data points, and we would be the ones to do it if we're going to do it. It is something that we think about. Eventually, we will probably launch a fund for international stuff as well. But today, we're up to our eyeballs and funding transactions. We're going to issue about 56 million worth of transactions later in the next 2 days. So we're pretty busy here, but there's some amazing opportunities in Europe, for example, the European Union. That'll probably get totally ratified there completely for the whole European Union before the United States, just because the cat wasn't out of the bag so far with how it's been done over there. Portugal has got a pretty good lead. Germany is talking about recreational fairly soon. But when we looked at it already, the market is so small for our capacity that it wasn't worth our time yet to build up a whole nother fund and what the infrastructure we would need for that. So we decided to just let that market continue to develop.
So what's your goal of your fund in the next 12 to 24 months? What would you like to?
Our domestic fund, or did you say
your domestic fund? I'm sorry.
Yeah, so we're on track to. We want to get to $1 billion assets under management by next year. We think that we'll end somewhere between 400 and 500 million this year in this Q4. So that's our goal that we're trying to shoot for. I think we've got a path to get there, but that's where we're headed. Just continue to make good deals for for our investors and our borrowers, and to make it an equitable transaction on all sides so that it's fair. You know, we're not trying to grind every ounce of profit out of our borrowers, and but we have to make it appealing for our investors to be in the sector. So I think we've done a good job balancing that. And that's why I think that we won the Investor Most Innovative Award.
There you go. There you go. You don't need.
I could be wrong.
Well, no, that I think you're right. I don't think you need to know the criteria. Why? There's nobody else in the space to really compete with you in that way, because you said there's a few publicly traded companies, but you guys are definitely the leader in the space. So it makes total sense. So I have a few questions that I ask all of my guests. Some of them may be complicated to answer, so I think you can handle them. Please describe what your first experience with cannabis was like.
Yeah, probably when I was fairly young. It's just part of the natural part of growing up as a kid, and just tried it. It wasn't really for me, so I stayed away from cannabis primarily. And most of my friends weren't big pot smokers. And it seems that, through high school, there is kind of a group that goes that direction. Yeah. And I didn't go that direction.
Did you have like an experience that you didn't enjoy? Was it
yeah, for me, I even as a young man or kid, I like to be in control, and it wasn't that I was out of control. I just felt that there was too many thoughts going on in my head that I wasn't used to having to manage. And that was an uncomfortable feeling, and it just wasn't my deal.
Got it. All right. So I'm a big music guy. Probably you can tell behind me. So do you remember what the very first concert you ever attended was?
I do, but only because I was taken by my neighbors. And I almost don't want to say what it was, but it was the Go-Go's, our next door neighbors, for their kid's birthday party, had an extra ticket with front rows. So it was a pretty cool experience, I was really young. I was, just a teenager or so, early teenager. But so totally sober, very young kid. But
yeah. But Go-Go's, why? They were great, man. Belinda Carlisle, she was hot.
She was singing right to me, buddy.
Yeah.
I was like right at the front, little kid.
That's awesome, man. Yeah, I had an incident with her. So I had fake ID when I was really young, like 16, 17, so I could go to the older clubs. And there was a club in Philly, and it was a very underground, dingy place. But Belinda was there, and she was stunning. I couldn't believe how beautiful she looked in person.
Cool.
And she was so cool. So I got to dance with her in the club, and I was like 16, 17. So what was the last concert you ever attended?
Shoot. Dang.
I know you're busy. You probably don't have a lot of time to.
I do. We're discussing, my son likes Imagine Dragons. So we're working on trying to coordinate that. So most of the stuff that electronic music, Tiesto and all kinds of
got it,
stuff like that. Lots. Those are probably the more recent things.
More of the EDM stuff.
Yeah, and just being at events those are that's happening. It wasn't really that. So a band concert. I can't remember the last one yet. I can't. I'll have to think about that for a minute.
Hey man, Scorpions are playing tomorrow. I'm going to see them in Whitesnake. It's the old people's concert, so we'll be there. What about the first album that you purchased?
I remember purchasing Rush when I was pretty young. That's one of the ones I can remember.
So I know you're not really a consumer of cannabis, but in general, maybe you can say, what has cannabis meant in your life?
Yeah. So, I'm at the point in my life where I don't really. So the only thing I use cannabis for today is I'll occasionally use for THC CBD blend to sleep. But I'm not using it for psychoactive properties to get high. Right. I'm not a big drinker or a big partier, So that's my lifestyle is so busy doing other things. And when I do have free time, I typically am either spending it with my kids, my family, or I'm driving on the racetrack, or I'm snowboarding or something where generally I need to have as maximum faculty capacity as possible, especially driving on the racetrack. And so there's just no way I could compromise that.
So I see the M hat. Tell me about the racing part, because I see you lit up when I asked that question. Did you get a chance to drive the Porsche track?
Yeah, I've driven the Porsche driving experience.
Yeah, that's what
I I drive with BMW at the Thermal Club, and I've trained with them for years and years and years. And I've trained with them on the Nürburgring and at Spa. And so, you know, today I'm honing my skills on the Nürburgring once a year. So I work here, and then I drive here, and then I take all that and I go to the Nürburgring. But the funny part is that now I've gotten past the limit of the M cars, and now I'm had to switch to the GT3.
Yeah, GT3. Do you drive an M? You drive a BMW?
Yeah, so I daily drive an M sedan, and but
which one?
M5. Yeah, but at the Nürburgring, the M4 was what normally I'd be driving there. You're maxing out at a time of about 7 minutes and 35 seconds. It's like the world record for that car.
Wow.
And in the GT3, the first time I'm driving a Porsche ever, I'm doing 740s.
Yeah.
And I'm only 40 seconds off the world record in that car, but that's how much better that car is than the M4. And it's just incredible how different a car that are supposed to be relatively comparable, just not even close.
Yeah, I would say they're not really comparable. I think it's two different cars. I'm not a humongous car guy, but I used to have an M3 years ago, and then driving that is a great experience, but it's not the same as driving a Porsche. I think it's different. So I'm going to ask. I don't ask typically, but since you're a car guy, what about like a Tesla? Like a Tesla S, how would you compare that?
I'm not opposed to them. It's just that the way I drive and the things I do, the Tesla would be burned up in 10 minutes. And then I'd be out of a car for the rest of the day. Like if I took it to the track, and I do a lot of driving in the mountains or rallies and things like that, there's just nobody's going to all stop and wait for me to charge up for 2 or 3 hours if there's a charging port and if it works.
Right.
So, I mean, I do have a electric scooter. I ride back and forth to my office for a couple miles here, but it's not practical. The next evolution of the BMW M cars is electric assisted. Yeah. And that's practical for me because I don't need all that power, and I can just do the electrified driving just to and from my office. And when I get out on the track or if I'm doing something, I can use the rest of the power. So I'm open to that. Yeah,
I drive a hybrid too. That's definitely makes sense for that. And I agree with you. You can't do the same thing. You have the push, like you go, but it doesn't have the same. There's no gears, and it's different kind of drive. But I agree with you. All right. So final bonus question. Please describe what your room looked like growing up.
My room, I have a relatively clean room. I was actually a computer nerd. I wrote computer code and taught myself, and was one of the youngest computer companies in the world at the time. So nothing crazy there. No, didn't have a bunch of posters or anything. Just a normal room. Nothing spectacular.
No Christy Brinkley on the wall. No Lamborghini Countach.
No, I was into cars, but I just thought that I didn't have that. I didn't do that.
Rob, where can people find out more about you, get in contact with the fund
so if people are interested on the loan side, you would email info at Pelorus Equity Group, and Pelorus is PELORUS, and then the word equity group spelled out.com. If you're interested about learning more about our fund, you would email IR for investor relations at PelorisEquityGroup.com. And just to give a quick information on the fund, our fund is got about 350 million assets under management, makes monthly distributions. We have a 1.5% asset management fee, an 8% pref, and then an 80-20 split, 80% going to the investors. And our target yield is between 12 and 15% each year, which we've achieved every year we've been in full operation, which is now we're completing our 5th year now.
Excellent. Thank you so much for being on. Really appreciate
you.
your time. And I'll make sure that I tag all those things on social when we get this
Okay.
posted.
Nice to meet you. And
Likewise.
anytime you're down here, we'll go for a ride in the M car.
All right. Sounds good, man. I'll take you up
All
on
right.
that. Appreciate it.
Bye.